taxes is your number one expense, right? It's more expensive than you paying for rent. It's more expensive than you paying for mortgage, all that. Taxes is everybody's number one expense. So if we can eliminate that number one expense, then you actually have more money to invest, right? If I could put an extra $10, $20, $30,000 that you were given to the IRS and said, take that money and start to invest, now you have money to invest, or you have more money to invest. So I think it starts with understanding how to win the game of taxes. If you know the strategies to implement, you can legally avoid paying taxes.
How much money do you need to retire? They might say $1 million. If I had $1 million, but following the 4% rule, that means you're only going to be able to withdraw $40,000 a year to live on. So we had to come up with a strategy that was more innovative and said, how can we get to the ideal outcome, even if a person doesn't have as much accumulated, right? And so the way we do that is understanding that the goal is cash flow, not accumulation, right? So when we think about how much money I need to live my daily life, right, per month, it's like, what vehicles and how can I invest my money to accelerate that cash flow? So it might start with investing in the stock market, right? But what we're going to do is once the money is invested, then we're going to say, well, how can we leverage, right, that portfolio to acquire assets that do produce cash flow?
You're going to get hit with 30-40% taxes, depending on how much you make. So if you make $200,000, you're going to be looking at a $50,000, $60,000 tax bill. But if you make $200,000 in your business, you can legitimately make $200,000 income in your business and pay no taxes.
If I had to recommend, I don't recommend many, but I wrote a white paper on this, right?
Oh yeah. Now you're gonna tell the world?
now I'll let the world know. Our clients knew 2 years ago.
Yeah.
The stock of the decade. I wrote this probably a year and a half ago. And there's receipts. I posted something online about it.
All right, y'all. So welcome back to another episode of Motion and Success. Listen, guys, my name is Cody Brown, and I got my co-host with me today.
Yes, Ayo. And bro,
and we back with another good episode.
With another great episode, man. I'm excited for this one. We got 2 experts in the field, bro. 2 experts, definitely. So today's gonna be another episode where Motion and Success actually meets Melanin Money. Hey, 2 different, two different experts crushing it in their industry, and pretty much we're gonna have a conversation that's gonna be mind blowing for me. Definitely, more of a mindset shift as well, and pretty much just gain some more knowledge and see how people can change their situation and be able to get themselves some motion and success. So, gentlemen, go ahead and introduce yourselves. Tell the people who you guys are, what you guys do. Let's get started, man.
Yeah. So my name is George Acheampong, the better half of Melanin Money.
Wow. Starting off early. Okay.
But now I'm a wealth manager, financial advisor, one of the top 100 advisors in the nation, as ranked by Investopedia, and just on a mission to decrease the wealth gap by $100 billion.
Carter Cofield, tax expert, CPA, the best tax expert in the game. No shade to Miss Business. No, that's my sister. But yeah, man, co-owner of Melanin Money, man. We had a bigger mission than ourselves. We both were doing amazing on our own, man. But we find somebody you can come together with, and y'all could build something bigger than yourselves. It was an amazing paradigm shift for us to come together and really do what we're doing now.
Facts, definitely. I gotta even commend y'all on, like, just the presentation. Like, you guys came suited up.
Yeah, it's motion to success, though, right?
Yeah,
you know what I'm saying. You gotta look like money. You know what I'm saying?
Definitely. But I definitely do. I want to jump into just a little bit about a backstory. On both of you guys. I definitely know. To get where you guys came from definitely wasn't easy. So just give us a little bit of a backstory.
Yeah, so for me, I grew up on the south side of Chicago. It was like 8 of us in a 2-bedroom home, typical poverty situation. But what was tough for me was that my mom passed away when I was 14. My dad passed away when I was 16. I didn't open the gift until I was 18. And what I mean by that is that I truly believe that adversity is a gift if you decide to open the package. And so with me losing my parents early on, it was tough for me at first, but then by the time I turned 18, I had this realization where because I lost my parents at 16, I had to grow up at 16. Most of my homies didn't grow up till they were 21, 22, 23 years old. So I actually had a 6-year head start on all of my peers and friends on how to start and when to start taking life seriously. Right. So since then, I was able to put myself through college, graduate, undergraduate, master's degree, and I did all these things. And I think if my parents didn't pass away early on, I wouldn't have had the same success that I had today. But the difference is with me, and I think some other people that have childhood trauma, is they just refuse to open they refuse to open the package of the gift of adversity. Because when you go through adversity, you can't change it. Right. So you either let it break you or you allow it to make you. And I decided to go the other route.
Yeah. So, growing up, just like many people, grew up in, single family household. Money was something that was a challenge for us. And so for me, I just wanted to learn about money so that I could hopefully have it figured out for myself and my family. And so what that resulted in is me going to school to get a double major in marketing and economics, not planning to do anything with the economics degree besides just understand money. And what ended up happening was I graduated in 2009 when the recession was going on, and so marketing was viewed as a luxury, and so economics then had to become the career path. And so I ended up getting in the financial services industry, started working with a lot of people that didn't look like us who already had money, and basically they wanted me to help the rich get richer. Yeah. I was like, I don't know, this doesn't feel right. It's got to be a better way than this. And so I think the straw that broke the camel's back was they told me to do an exercise called Project 200, and basically write down 200 people that you know, friends, family members, whatever, that you'd want to trade paychecks with, or that had a minimum investable assets of like 250,000. I was like, I can't think of 200 people. I don't know if I can think of 2 people, right? Wow. And so what it made me realize is that there wasn't a lot of people that looked like us who knew about building wealth, right? So I was like, okay, well, how can I change that narrative? Does it mean that we shouldn't know? Does it mean that we shouldn't have access? Probably not, right? So started down this journey to figure out how I could use my voice, use my skill set to help more people look like us build wealth. And then one day I had a spinal fusion surgery back in 2016, and I couldn't sleep, like literally couldn't sleep. Not like one of those things like, oh man, I was up, I couldn't sleep. Like I legit was sitting in a chair like this, a recliner, and just couldn't sleep. So I had nothing to do, nothing to do but time on my hands, and all I could do was think. And so I was like, I want to help Black people with money. I was like, Black money, build wealth, melanin money, right? And it hit me like a ton of bricks. Check the domain, check the trademark, and then the rest is history. Right. Wow. And so then we formed a partnership. Yeah.
When he told me the name of his company was Melanin Money, I said, off the name, we can't lose. Right. Off the name, like it's just, I think it's a name and a brand that people can see themselves in, and it's a name and a brand that people can get behind. Right. Yeah. Right. Because it's like, how do we help and super serve people of color to build wealth? And I think Melanin Money is the name for that. Yeah.
And at that same time, a report recently had came out around the same time that Black wealth was slated to go to zero by 2052.
Seriously?
Yeah. Right. I think the report had came out, 2018, 2019. So it's like a year and a half after, whatever, but it solidified like me knowing that this is the path that we had to go down, right? This is so much bigger than us, because he came from a Big Four accounting firm, right? He could have kept consulting with the biggest companies in the world and helping them move some pieces around to save hundreds of millions of dollars in taxes, right? Everybody goes home happy with it, whatever. I could have continued to help rich white people stay rich, right? But when I saw that stat, I'm like, somebody has to do something about it, right? And if not us, then who? And if not when, right? So now I became the answer.
Wow. Even like the list. So like when you was building out the list, that was to like get your first client?
Yeah. And it ended up working out really well. Like on the back end, right? So I would love to take credit for it. What ended up happening was, because I didn't know that many people who had money, right? What I had to do is, I think LinkedIn was around at the time. I had to create a list and basically go to people and say, hey, look, I know that you're already killing it in your respective industry. You probably already have a financial advisor, right? But what I'm trying to do is serve people in your industry. Do you know anybody who needs X, Y, and Z, right? But because I wasn't directly asking them, their guard was down, and they loved the fact that I was edifying them as like the GOAT in their respective space, right? It's like, well, yeah, I do know some people on the plug, but also I could use some help with my 401k, right? So it ended up working on the back end, and that kind of was the thing that propelled me to get started. But that was the intended purpose, was to create a list of 200 people that could be your clients. I just didn't know a lot of people with money at the time, right? And then your family was like, boy, you was just doing, you were just on a food truck. What you talking about? You know what I'm saying? How you gonna help somebody with their money, right? So between that and me being young at the time, it just, I didn't know anybody that I could help with it.
Wow, definitely. Nah, I really love what y'all doing, because unfortunately, like people that do look like us, like be behind, and like it's in terms of building wealth, like it's like I feel like so far behind, and it comes down to like a lot of like misinformation growing up, like even me sometimes, like I had to kind of like reprogram myself. So the fact you guys are out here and really set a goal, I think they said you guys want to make $100 billion for Black families. 100.
Yeah, we want to decrease the wealth gap by $100 billion by helping 100,000 people of color achieve their first or next $1 million in net worth. Right. Last year alone, our clients improved their collective net worth by $100 million.
Over 100 million.
Not just half the year. Right.
So like, what's y'all go-to, like, what's the go-to formula? Because you're a financial advisor, and then Carter's a CPA. So like, what's the formula that you guys would use to be like, all right, cool, let's lower this wealth gap?
Yeah. You never asked.
Yeah, so I think it starts with taxes, because whether you know it or not, taxes is your number one expense, right? It's more expensive than you paying for rent. It's more expensive than you paying for mortgage, all that. Taxes is everybody's number one expense. So if we can eliminate that number one expense, then you actually have more money to invest, right? If I could put an extra $10,000, $20,000, $30,000 that you were given to the IRS and it said, take that money and start to invest, now you have money to invest, or you have more money to invest. So I think it starts with understanding how to win the game of taxes.
What's up, YouTube family? We're going to get back to that amazing episode, but we want to tell you about our Multiply Your Money Challenge. This is a 5-day live training with both me and George, where we're going to be giving you the exact strategies that we use to help our clients save on taxes and maximize their wealth. And you're going to get the opportunity to ask us your personal questions. That's right. You get to spend 5 days with 2 experts and get your tax and investing questions answered. This is crazy, bro.
Facts. So if you've ever watched one of our episodes, like, yo, I wish I could just ask Carter this. I wish I could ask George this. This is going to be the opportunity to do it. Or if you've seen any of our posts or any other expert on Instagram, and you just wish that you could get those questions answered while also learning revolutionary strategies to build wealth, then this is going to be an experience you don't want to miss. I can't wait to see you inside.
Click the link in the show notes so you can grab your seat. Now we get back to the episode.
Facts. Right. The tax code is an incentive system that teaches us how to avoid paying taxes. The problem is most people don't know the rules of the game, therefore they can't win the game, right? And it is, our current president, Donald Trump, he had a $720 tax bill in 2021, I believe, and hundreds of millions of dollars made. So how did this happen? Well, he understands the rules of taxes, therefore he doesn't have to pay them. And I think so many times our community just gets jaded and scared about taxes because we fear what we don't understand. But the tax code doesn't care if you're black, white, yellow, green, blue. If you know the strategies to implement, you can legally avoid paying taxes. Now that you have the extra money back, then you can take that money and start to invest.
Yep.
And we could give you the cookie cutter strategy of saying, buy an ETF and hold it for 30 years and, look up one day and you should have $1 million to invest in retirement. But what I realized as a wealth manager and financial advisor is that, money is a tool, not a pool. Right. And most people look at investing, from a method of accumulation, like how much money can I build up? And then ultimately, when I have that nest egg, I can draw down 4%. That's the industry standard. Right. The problem is everybody says, well, if I asked a random person on the street, like, how much money do you need to retire? They might say $1 million. If I had $1 million, but following the 4% rule, that means you're only going to be able to withdraw $40,000 a year to live on. Most people can't live off $40,000 a year right now or don't want to. Right. So we had to come up with a strategy that was more innovative and said, how can we get to the ideal outcome, even if a person doesn't have as much accumulated? Right. And so the way we do that is understanding that the goal is cash flow, not accumulation. Right. So when we think about how much money I need to live my daily life, right, per month, it's like, what vehicles and how can I invest my money to accelerate that cash flow? So it might start with investing in a stock market. Right. But what we're going to do is once the money is invested, then we're going to say, well, how can we leverage, right, that portfolio to acquire assets that do produce cash flow, right? Because then if I leverage it to buy assets that produce cash flow, then that's going to help me get to my target a lot faster. Not to mention some of that cash flow, if I'm in the years of not needing the money because I'm still working, I can reinvest the cash flow back into the portfolio, which is going to give me more money to rinse and repeat that cycle. Most people are just only leveraging their money in one way. Our clients are able to get 3 different, sometimes 4 different uses out of the same dollar invested.
So they're getting 3 income streams or 3?
So I'll break it down for you, right? So step 1 is we have a philosophy called the Burger King investment strategy.
Burger King
investment strategy.
Like the restaurant.
Yeah.
Follow.
Right. So McDonald's, which we all know and love, right? We used to love. Hopefully I'm not eating a lot of McDonald's these days.
Please don't.
Right. But McDonald's spends a lot of money every year determining where they want to put the next McDonald's. We've all heard that McDonald's is in the real estate business, right? So the location matters. They're going to be very intentional about where they put that building. Burger King, however, says, well, shoot, if you already spent all that money on figuring out where your location needs to be, I just need to be somewhere close by.
Yeah.
They don't spend a lot of money, right? So it's okay to be a copycat if you copy the right cat. So in investing, it's the same thing. Vanguard, Charles Schwab, Fidelity, all these companies, they spend tens of millions of dollars, right, on analysts and fund managers who do all this work to research how these ETFs need to be structured, right? And so what you can do is say, I'm gonna be a copycat. I'm gonna go to Vanguard, look up top ETFs. Oh, VOO. I'm gonna click the buy button, right? I didn't have to do all the research to figure out which investments I needed to select, right? I can hit the buy button, and then I think last year VOO did like 24% or something like that, right? Cool. Now we could stop there, right? That's fine. However, what I realize is when you look inside of these ETFs, they will literally tell you all the different investments that are
They
inside
spent
the ETF.
millions of dollars researching.
Right.
Yeah.
And they'll tell you for free, right? This is
Yeah.
free information. You can go to Vanguard.com or type in VOO. It'll come up and you can go to scroll down to the bottom of the page and you'll see all the different holdings, right? The same way you go to Google, though, when you type something in, typically the first page of the search results, you're going to find what you're looking for, right? It's not going to be on page 2 or page 3 or page 4.
Right.
So the aha moment I had is, this first page of 500 pages are probably some of the most important companies inside of this fund, right?
I see where you're going.
Right.
Yeah.
So then I say, okay, well, I still want the diversification of the index fund or the ETF. So maybe if I have $10,000 to invest, maybe $7,000 I'm investing in VOO. But maybe the 30% or $3,000, I'm going to look at some of those individual companies that they believe in so much, and now I'm going to add those as individual investments to my portfolio. Why? Because that means I'm going to have an outsized performance in my portfolio because the fund can only own so much because of how diversified it is, right? But if I can own a little bit more than they do while still having the diversification of the ETF, then I can win a lot bigger. And as a result, our portfolio and performance has pretty much doubled, right? What the average stock market returns are, well, a little bit more than that, for the past half decade or longer.
So your main go-to strategy is stock market, ETF, indices, all of that, all of the.
That's step one.
Okay.
Right? So step one is let's just at minimum have a base, right? Because your investment account is going to now become your new bank account, and I'll explain why in a second, right? So now that I have that, okay, I have the diversification plus I have the individual stocks. Now, what can I do while that's growing to invest in other assets, right? You got two options. Maybe I have some money in the bank and I can take that money out the bank to go buy real estate, right? But then I take it out the bank, now my money's gone, or I could use my portfolio as leverage and borrow against it. So most investment institutions, when you have money invested, right, they'll say, okay, well, I see you have $10,000 invested. I'll let you get a line of credit for up to 50% of your portfolio value. Why would they do that? The same reason why your home lender does it. It's called a home equity line of credit. When you have money invested in the stock market, you also hear referred to as equities, right? So your portfolio is just equity.
Right.
So they're willing to give you a 50% line of credit based upon the value of your portfolio. Then you can do what? You can then take that money and then go invest in real estate.
Yeah.
Right? But what is that real estate going to do? It's going to produce cash flow.
Right.
Right? And it's going to appreciate. But we're trying to keep this cycle going. So we're going to take that cash flow and then we're going to do what?
Buy another one.
Invest it back into the property so that we can then have more money to leverage to keep the cycle going.
Yeah.
Right?
And what's so interesting about this strategy is like I have a financial background, but I didn't really understand what was happening. But when you borrow, I didn't understand the difference between borrowing from your investments and borrowing from your investments. So I think it's good that
Borrowing from versus borrowing against.
Yeah, borrowing from your investment versus borrowing against your investments. If you have $10,000 in your investment account and you borrow from your account, you borrow $5,000 from your account, you have $5,000 left because you had 10, you borrow 5, right? But when you borrow against your portfolio, you have $10,000 in an account, you borrow $5,000, you still have $10,000 in there. And if that money grows at 30%, your $10,000 is still going to make $3,000. But I just got $5,000 a loan against it, and I can use that loan to buy other assets. Right. So you essentially get to use the same money. You get to invest the same dollar twice because the money's still invested in your portfolio, but you take the money you borrow and you reinvest that money.
Right. And then the cash flow, you reinvest that back into the portfolio that's also earning 30%. So then you're technically investing it 3 times.
Breaking news, and I wanted to be the first person to let you guys know that we are bringing the Motion and Success community back, guys. So listen, this is going to be the #1 community for entrepreneurship growth. We're going to be showing you, #1, how to go out and use credit to fund and scale your business. We're getting approvals every other day inside our funding company. And I'm going to be showing you what's working in today's market so that way you're not left out. #2, we're going to show you exactly the strategies on how Motion and Success was able to grow from 0 followers all the way up to 150,000 plus subscriber and millions of views across different channels in less than a year and a half. I'm going to be breaking down that information as well. And not only that, we're going to be inviting our alumni back inside the community to be able to wrap their arms around you guys, give you more intimate information, give you that help that you guys need, so that way you're able to start growing and scaling your business. So listen, guys, if you want that kind of information, you want that kind of family love, if you want that kind of guidance in your business, if you want motion and success for yourself, go ahead and join us in the Motion and Success community, because listen, this is going to be the #1 year. We're going to be bringing back all the 7-figure earners that we went ahead and interviewed on our channel. So go ahead, stay tuned. I'll see you guys inside the community.
So now let me ask you a question. Why not just go the credit route, where you go to a traditional bank, pull out a line of credit, and then buy a property?
That's a great question. So let me ask you this. When you take a loan out from the bank, who are you paying interest to?
The bank.
When you take a loan out from your portfolio, who are you paying interest to?
Assuming you're paying the loan back like you would any other.
If it's my money, I'm paying myself back.
Correct. Bingo.
So why would I pay the bank interest when I can pay myself interest?
Does that make sense?
Yeah. I get it.
Yeah.
Yep. Now, here's the thing. We're not saying that getting access to capital in other ways is bad. We're just saying this is an avenue that most people aren't taking advantage of, right? If you have a business, sure, like get access to capital, get lines of credit, do all those things. But at the same token, right, under most circumstances, I know there's, a bunch of information out there around like, no doc loans and this, that, and the third. But like the beautiful thing about this is your credit score doesn't matter, right? Because it's all based upon the value of your portfolio, right? You have a 400 credit score. If you invest $10,000, you can still get that same line of credit, right, off of your portfolio value because it's based upon the equity that you have, right? So it's just another avenue that allows you to make your money work for you in multiple ways.
Definitely very interesting.
Wait, sure. so George, like, could you, like, because I've been investing in Vanguard for some time.
Sure.
So I wanted to know, like, how could you take that? Like, how could you borrow against it? Like, what steps would you take? Yeah.
So the important thing to understand is the individual investments themselves, like Vanguard or VOO or whatever ETFs you're investing in. Those are investments, right? But there are brokerages. You can invest in VOO on any of them, right? So you'd want to choose a brokerage company that allows you to facilitate that. Most of them do, but if you're investing directly at Vanguard, you won't be able to, right? But M1 Finance, Fidelity, Charles Schwab, most of the big ones, they have different thresholds and different limits, but assuming you have that ETF that you have with Vanguard at one of those institutions, you would just want to ask them about their portfolio line of credit, and they'll tell you the terms, right? And then from there, you would be able to borrow against the value of the portfolio.
Oh, okay.
Yeah.
So
our preferred one that we recommend pretty often is M1 Finance. Yeah.
Send us a check.
Right. M1. Hey, look, sponsor the boys. You know what I'm saying?
So, I mean, we're in 2025 now. A lot of things is going on. We got AI, Trump president. What is some financial advice you guys would give? Because, I mean, the thing is that anytime, like, let's say we even post anything, clips, YouTube, everybody's like, don't listen to this person, get your financial advisor, get a CPA. So now you guys are here right now. So it's like,
we got him.
Yeah,
we got him.
Yeah. So it's like, you definitely got to come here and come with some good questions. So, like, what advice would you give people who are looking to invest their money in 2025? Like, what are some things that you guys are seeing, trends? Or things that you guys
Can I give you a probably an unpopular answer? Would that be okay?
Yeah.
And most of my advisor friends will probably think I'm crazy for saying this, but y'all have heard the S&P 500, right?
Yeah.
Right. It's passive investment, or you can expect 10% a year, right? And most people, like, the question I get all the time: if I had $1,000 to invest or $10,000 to invest, how should I invest it? Well, I'll say, is that all you have to invest? I say, yeah. I say, well, you should invest in the S&P 500. And they want to start Googling, like, what do you mean? Like, no, invest in yourself, right? Skill set acquisition is one of the greatest levers that you have to building wealth, right? Because what do you think is more probable? That you're going to get 100% return on your investments, right? Or that you can make an extra $10,000? Right? More than likely, you're going to be able to make an extra $10,000. So, and when people have limitations on how much money they can invest, I say the best thing you can invest in is yourself. Not to say that I won't give anything practical on like what trends are we seeing in the investing sector, but I think that has to be at the top of the list, because most times people are trying to make money while they sleep because they haven't yet figured out how to make money while they're awake.
Period.
Right? Let's check that box first, right? If you haven't gotten to the six-figure threshold in whatever it is that you do, whether you're a working professional or an entrepreneur, that means we need to solve the money-making problem first, because it's misguided thinking, oh, I need to save money here, or I need my stock to go crazy. Like, no, you just need to make more money, right? Like, you need to acquire skills, become more valuable to the marketplace, and as a result, then you can reinvest some of that money, right, in stocks, in real estate. But I think people jump the gun too fast because they're actually frustrated with the fact that they aren't making money or they're not fulfilled, and as a result, now they're searching for a way out with these passive investments. Like we were, it was like President's Day last week, right? Our team with the whole company off. Me and Carter are still working. Do we have to? No. We enjoy what we do, right? And so I think people need to focus on acquiring skills. I think that's the number one thing, right? If I had to get something practical or tactical, I would say, obviously, you mentioned AI. I think leveraging AI to, grow and scale your business. I think you can make your business a lot leaner, make it more profitable through automation and through artificial intelligence. I think there's so much out there. I won't proclaim to be an expert on that, but I think investing in the skill of really understanding how you can leverage AI in your business, I think it's something that will pay dividends in 2025.
Yeah, and I think another reason why that's important is because it's not about how much money you make. It's also about how you make your money, right? If you make your money at a W-2 job only, you're going to get hit with 30-40% taxes, depending on how much you make. So if you make $200,000, you're going to be looking at a $50,000, $60,000 tax bill. But if you make $200,000 in your business, you can legitimately make $200,000 income in your business and pay no taxes.
All right, so sorry to break the episode. This message is for any entrepreneur. You really do a good job. You're killing it at whatever you do, but no one knows you. You have no social media presence. Well, guess what? You're missing out on a lot of money. Good news is I help entrepreneurs like you grow organically on social media. No gimmicks, no ads, just authentic, strategic content that converts. And if you're a podcaster, I've got you covered as well. If you're struggling to grow your show, struggling with editing, well, I cover those services as well. It's time to stop procrastinating and take action immediately. Click the link down below and book a call with me where we're going to sit down and talk one-on-one, and we're going to start helping you grow and create some motion and success, but more importantly, get you some leads that will convert into dollars. So what are you waiting for? Your audience is waiting for you. Let's get them to trust you. Click the link below.
By implementing tax strategy. So now you just put now if you by going from making $200,000 in your job to making $200,000 in your business, you just put an extra $50,000, $60,000 in your pocket because you no longer have to pay taxes, because how you make your money is more important than how much money you make.
Yeah.
Right.
Is it possible for a W-2 person to not pay taxes like a business owner?
Yes.
What will be like the strategy or steps?
Yeah, so the only strategy that W-2 employees can take to not pay any taxes is by taking advantage of something called the short-term rental loophole. Right? So to make a long story short, you only can save on taxes if you're either a business owner or a real estate investor. Right? So you can still keep your W-2 job and invest in real estate. What you need to do, though, you need to purchase a real estate property, and you need to rent it out on average for the year 7 days or less. So if you have 300 different renters, and so if you rent out for 300 days and you have 30 renters, if you rent 300 days, you have 30 renters, that is 10 days a year, right? Give or take. Yeah, so you have to have an average stay of 7 days or less, and you have to work on your property 100 hours or more. If you do those two things, you get qualified for something we call the short-term rental loophole, meaning there is no cap on how much losses you can take when you depreciate the property. So a real estate, your property can appreciate in value, but with a tax deduction called depreciation, you can still write off as if it decreased in value.
So correct me if I'm asking it wrong. Would you be saving on, where would you be losing? Because you're winning on the tax strategy side. You're saving money on the taxes, but you're depreciating on the real estate. Would you be losing in any aspect? Or am I asking the right question? Yeah.
So I mean, it's hard. It's hard for a lot of people to wrap their mind around. It seems almost illegal. So let's say we got a $500,000 property, right? And you calculate your depreciation by taking the value of the property and dividing it by 27.5. So if you take 500,000 divided by 27.5, it's gonna be roughly around $18,000. You get an $18,000 per year tax deduction for having the property. right? But if the property makes $18,000 a year, right, in cash flow, you receive $18,000 in your bank account, right? But when you file taxes, they're gonna look at $18,000 of income. They go look at your $18,000 depreciation deduction, and you're gonna have to pay taxes on $0 because the $18,000 is gonna wipe out the income, right? So you earn $18,000 in your bank account, but you earn no income on your tax return.
Right.
Because of depreciation.
Because look at it like this, right? The IRS is still looking at your property as this physical thing that over time is going to have wear and tear, right? Yeah. So they're giving you that credit, right? The depreciation that you can take advantage of because they're saying over the life of this property, right? These things are going to happen. Technically, the value of the property, right, of the structure itself is going to wear down over time, right? So that's why you get to deduct it. However, it doesn't mean that you're not getting that cash flow in real life. So you're able to leverage the tax code, right, in the rules of the tax code to decrease your taxable income while still actually receiving the money.
Right.
Does that make sense?
Yeah, I understand.
And I'd be remiss if I didn't give an actual stock tip, right? So one stock, if I had to recommend, I don't recommend many, but I wrote a white paper on this, right?
Oh yeah. Now you gonna tell the world?
now I'll let the world know. Our clients knew 2 years ago.
Yeah.
The stock of the decade. I wrote this probably a year and a half ago. And there's receipts. I posted something online about it. Palantir, right? Ticker symbol PLTR. It is going to be the stock of the decade, right? So I'll say we got another 7 years before it would be like investing in Tesla 2018, right? It's an amazing stock, right? As a matter of fact, for your listeners, I will literally create a PDF, right? It's literally, I gave it to our clients. I'll create a PDF that your listeners can download for free. We'll figure out some way that they can get the information for free, right?
Right.
Because I don't want to. If I start talking about the details of the stock now, we're gonna be here all day.
Like George
but just
said.
know that is a stock, the stock of the decade that I highly recommend. So if someone's like, "Where's one place I can invest my money in 2025?" That is a stock that I would recommend.
All right, so George, that was game that you gave, bro. You know, not all the time we get people, financial advisors, giving out stock tips. You know,
it's rare. Like my team might be mad at me, right? But hey, you know, sometimes you got to break the rules. Sometimes.
Yeah.
Can I get a disclaimer? This is not financial advice. Right?
you always have, you gotta
Past
have
performance.
Give the disclaimer.
Past performance does not indicate future outcomes. Okay.
Yeah.
You gotta add that. I do want to ask you too. You know, credit is a big thing right now.
Sure.
So how can people use credit to generate wealth instead of bad debt? Like, how could they do that?
Yeah, I mean, I think you just got to look at it the same way the bank looks at it, right? You know, you put your money in the bank, they give you what, 1%, 2%, right?
If that.
Right, if that. Right, if that, if you're lucky, right? And why are they okay doing that? Because they have already done the math that they can make more money on your money than they're giving you, right? It's really that simple, right? So if you're going to borrow money, do the math, right? Okay, the credit card or this line of credit or this personal loan or whatever is going to cost me X, Y, Z in interest, right? But I've identified an investment that I believe is going to yield me Y in interest. And the difference of after I pay back the loan is greater, right? It makes sense. And I've given myself margin so that even if it doesn't go perfectly according to plan, it's still a profitable endeavor. I think people are afraid of debt because debt has almost always been associated with liabilities, right? You buy the car for this amount, 5 years later, you pay more for the car than you originally paid for it. Debt's bad, the end, right? But if you understand that debt can actually be leverage, right? It really becomes an extension of your productivity if you use it the right way. What I mean by that is you make whatever you make, right? You make $50,000 a year, $100,000 a year, but when you get a line of credit, you now have access to maybe $130,000 a year, right? So technically speaking, for the hours that you work or the value that you brought to the marketplace, you have been able to get access to money that you weren't supposed to get access to, for all intents and purposes, right? Now, what you do with it will determine how fast you can accelerate. If you take that money, you go buy liabilities, and that creates supply and not to get too technical, put on my economics hat here, but that'll create economic imbalances, right? Where it's like, oh, why do prices go up? Because there's too much demand and not enough supply. Why is there too much demand? Because people are spending money that they shouldn't have access to on liabilities, right? But if you flip it on its head, and I take that same money and I buy real estate, right? Or I invest in a business that I can own but do not run, or whatever the case may be. Now, man, I can accelerate my wealth building because I now have money that I didn't have before, and I'm using it to buy investments. So I'm never against that. I just always tell people do the math, Right. Early this week, my client was like, should I do this thing? So, what does the math say? She said, okay. She went back and did it. And then from there, it's like, oh, objectively, this makes sense. And it gives you so much confidence and peace of mind because you're not just making a decision emotionally, right? You're like, okay, I did the math. This makes sense. No investment is foolproof or always going to be 100% guaranteed. But if you did your due diligence, you can rest assured that it was at least a good decision from the information that you had access to.
Right. That makes a lot of sense. It got to make sense. The math has to make sense.
Yeah, if you're borrowing at 6%, but the investment you get is at 20%, then you're making 14% on money you did not own, you didn't have. We don't call that debt. We call it arbitrage, right? Because we're basically making money off the margin. That's all the banks do. So the banks can make trillions of dollars this way. We can't make a few million this way. Right. You know what I'm saying?
So Carter, I got a question for you now, because one thing I do see, like coming across clients in the funding industry and things like that, some people like, hey, listen, I've been operating as a sole proprietor. I got my EIN and I just sold the property. Now I have, the cash flow from it. What's your take on, entrepreneurs doing business as a sole prop?
You should not do that. Stop doing that. Right. Because here's the thing. A sole proprietor is not an actual business. The IRS doesn't see it as a business. It's not an actual business. And there is no liability limitation when you only have a sole proprietor. So for example, if you purchase a real estate property and you want to be a sole proprietor, cool. If somebody trips and breaks an ankle coming down those stairs in the wintertime because you didn't put salt on the ground, they can not only sue you for the property, they can sue you for everything personally. They can take your personal home, they can take your bank accounts, all that stuff, because you're not protected. When you set up your LLC, you now limit your liability. LLC stands for Limited Liability Company. And you basically put this shelter of the assets inside the business so that if you do something foolish in the business or do something negligent in the business, they can only sue you for what's inside of the business, and they can't touch you. They can't touch you personally. Like, the only thing that's worse than getting wealthy one time is having to get wealthy twice, because one lawsuit took all your money away, right? So you need to set up a limited liability company at the bare minimum. Like, here's the thing. If you don't take your business serious enough to incorporate it, why should I?
Fact.
Why should any of your clients?
Fact.
If you're doing business as just Carter Cofield, like, you're not taking your business seriously, why would I pay you, right? So if you're not taking your business seriously enough to incorporate it, give yourself a name, get an EIN, get a business bank account, why should anybody do business with you?
Yeah. Grateful, we're in New York, right? Great philosopher once said, more important is lawyer fees, right? You gotta make sure that you have your legal protection in place.
Yeah.
Right. People want to skip steps, right? Everybody want to get to the revenue, everybody want to get to the money, but nobody wants to work on the infrastructure. Nobody wants to work on the back end, right? And that's just a part of business. That's a part of doing business. I gotta have my stuff set up the right way.
Right. Yeah. So how about like benefits as a S corp, C corp, or even a corporation? Like, what's the benefits on those?
Yeah. So it's really I call it my business entity flow chart. There's no such thing as the perfect entity. There is a such thing as the perfect entity for you where you are in your business. So it's all on a timeline. So you want to set up the LLC before you start the business. Before you start selling your goods and service, you want to set up the LLC because you want to have that protection before you go into the marketplace. Cool. You're going to stay at LLC until you start making over $50,000 net income in your business. And net income is revenue minus expenses. So if you're making $100,000 in revenue, but you have $30,000 of expenses, your net income is $70,000. Right. Once your net income reaches over $50,000, you become an S corp. You file a form called 2553, which is the S selection form, and it'll have your LLC taxed as an S corp. You're going to stay at S corp for a very long time. Like, it only makes sense to potentially graduate to a C corp if you're doing over $3 million in profit for your business. 95% of businesses don't make it there. So most people are going to stay at an S corp for a very long time. Right. If you do that, you'll be able to save on taxes, because LLCs don't help you save on taxes. S corporations help you save on taxes.
Yeah. And the only caveat I would say to that on the C corp side is if you know from day one that you're going to have investors.
Yeah,
right?
Exactly. Yeah.
But other than that, like, probably like once you get to S corp status, you're going to stay there for a very long time.
Yeah.
Yeah.
Is it so I want to ask another tax advice, like, especially for parents. What are some tax tips that you could give them to put their kids in a better financial situation as they get older? I'm hearing that you could put your kids on a salary, but like, what are some tips that you know that you know, when the kids turn 18, like it'll be.
Yeah. So most people, they make money, pay taxes, and then give money to their kids on money they already been taxed on. What I recommend you do is you make money, pay your children from your business, and then you don't pay taxes on the money, because there are ways and strategies where not only can you get a tax deduction for the money you pay your kids, but your kids can actually receive the money tax free. So I'll give y'all a story of one of our clients. One of our clients, he had a good business owner doing multi six figures, and he had 2 kids, right? It was like, do your kids work in your business? He said, of course, my kids do everything I tell them to do. Cool. Do you pay your children? He said, no, my children's payment is the roof over their head, right? I get it, right? That's what every parent would say. I said, okay, I understand that. But what if I told you there's a way for you to pay your kids and avoid taxes? He was like, what are you talking about? So the IRS in 2025 allows you to pay each child up to $15,000 a year. 2 kids. So he can pay each of them $15,000. So he basically would pay them $30,000 in total. His business will receive a $30,000 tax deduction for paying his kids, just like you get a tax deduction for paying anybody else. Due to the fact that the standard deduction, which all of us get, is $15,000, the standard deduction is going to wipe out that income that you pay your children from being taxable. So they made $15,000, the standard deduction $15,000, it clears out the income. So you just took $30,000 from a 37% tax bracket, and we moved it to a 0% tax bracket, right? So now you paid your kids, your business gets the write-off, your kids receive the money tax-free.
Right.
And if you want to put this on steroids, now your kids have income. So now we can set up what's called a custodial Roth IRA. And with a Roth IRA, you never pay taxes on the earnings in the future. So the max contribution for a Roth IRA is $7,000. Well, our kids have $15,000. So we can take 7 out of the 15, put it into a Roth IRA, so it can grow tax-free forever. So we got a tax deduction for the money paying the kids. Our kids receive the money tax-free, and now the money is going to grow tax-free forever. So we got a triple tax benefit on the same dollar. And like, this is how you like hack the game to not only make sure you're successful, but make sure your kids are successful. In this client's case, his kids was about 7 or 8 years old. So if we do this for 10 years, we like did the math and an investment calculator, his kids will have over $100,000 each in a tax-free account. They can use whenever they want to.
Wow.
So if every parent is not doing this, then they're not setting their kids up for financial success the way they could be.
Facts.
So as far as like, you know, you guys, I mean, I know you have a kid. Carter, do you have a kid?
Not yet.
Not yet?
None he knows about.
I was going to say that.
That he knows about.
Yeah.
So like, what's some wealth strategies that you know you instill in, you know, into your kids, you know, when you have, and you know, right now.
Yeah. So my son's 3, so he's still young, but he's super smart. And one thing that I kind of said from day one was that I didn't want to pay him for chores, right? Because I feel like inherently to him that would translate that when I trade my time, right, for money, that's how I get paid, right? So as he gets older, right, I'm going to pay him for learning, right? So every time he finishes a new book, he gets paid, right? Anytime he maybe does a book report, he'll get paid, because what that's going to instill in him is that the more I learn, the more I earn. Right. So that psychological shift is really important. The other thing is, I don't know where the state of college will be. Well, actually, I do know. I've already kind of predicted on 2 podcasts, like 2 years ago on a podcast. Another story for another day. But I don't know where the state of education in college will be, right? 16 years from now, right? But let's just let's assume it's somewhat reasonably similar to what it is now. You can go to college, you can do whatever you want, right? My thought process is, I just want to give my son options, right? So when he turns 18, it's like, hey, look, because we set up your custodial Roth IRA, because we had the extra $7,000 that we also invested for you, we now have the seed capital, right, to launch your business. But because you're still 18, even though you was learning from me, I'm not going to give you all this money, right? I can be the CFO of your company if you want to present your business plan to me, and that could be an option. Now, he might still want to go to college, but if he doesn't, he now has the seed capital to be to have a business at age 18. Not to mention that at some point, I haven't done it yet. I'll probably do it like once he turns 5, right? I'll add him as an authorized user on my credit, right? I have a great credit. I have over 800 credit score. So not only is he gonna have multi 6 figures at the age of 18 that he can use as seed capital, he can use it for, you know, the money he needs for college or whatever he decides, right? He'll also have a great credit history off of the strength of what I did for those 18 years, right? 2 very simple things. As long as you're being a good steward over your resources, makes sense. right? Not to mention, as Carter said, like this, it is also incentive for me. I get a tax deduction for the business, right? I would be giving him the money anyway. It's just the order of operations. We all learned about order of operations in school, right? This is the correct order of operations on how to run your financial household.
Man, imagine where you guys would be if you guys would have learned this at 3 years old.
Yeah.
5 years old.
Well, that's the goal, to make your kids better than you.
Yeah.
Right. Like if they're not better than you by the time they get your age, you failed them as a parent.
Yeah.
Right. So, but we didn't have this information 20 years ago, but they will.
Right. You know the age old saying, the best time to plant a tree is 20 years ago, right? The next best time to plant it is now. And people say that every time we do like a free training or class, because last year I think we taught like 21,000 people live.
23,000.
23, sorry. Don't forget the extra 2,000.
Yeah.
23,000 people live, right? And there's not been one of those trainings where by the end of it someone said, I wish I knew this information sooner, right? The good news is you know now. What are you going to do about it?
Yeah.
Right.
Yeah.
Right?
Yeah.
George, you're the perfect person to ask this question. I do want your take, especially since we were talking about kids.
Yeah.
Crypto is a big thing right now. But for some reason, a lot of people are still skeptical about it. Like, I can't even get my brother to even put a dime in Bitcoin. Like, it's like,
It's a scam.
this is going down. It's going dump. It's a pump and dump, this and that. But seeing where the world is going, I feel like crypto definitely is going to have a use case. So I feel like if you don't have crypto, you're missing out. But what's your take as a financial advisor? Like, do you recommend crypto?
Right. My take is simple, right? When something, I'll put it to you like this. The seat belt was invented 75 years after the car was invented, right? So what does that mean? A lot of people got hurt for a very long time, right? And eventually they got it right? And since we don't know how long that time period is going to be, right, you want to invest in the most secure version of that, right? And so for me, my advice for cryptos right now is simple, right? It's like Bitcoin, right? Is clearly a leader, clearly one that, even though it's volatile, right, that you should maybe have at least 5% of your portfolio, I would say crypto exposure. And if there's any other prominent ones, if you still believe in Ethereum, if you still believe in XRP or something like that, cool, right? Because here's the thing. It's about asymmetric risk. And what I mean by that is if you invest however much money you have, if you lost 5% of it, it ain't going to take you out the game. But how mad would you be, right? If we're in New York, right? You could have got a brownstone in Brooklyn in 1974.
Yeah.
Right? You'd be pissed, right? So you want to have that exposure because it's like
The upside.
Yes, I could lose, but the 5% won't wipe me out. But the 5% that I did invest in, oh my gosh. Right? It was worth it. And that's how I think you got to think about it, right? You got to think about, like, I want to participate in what this could be. I don't want to be so overly aggressive because I don't know. I don't want to, like, there's some people, shout out to my guy, Chris Johnson, and it's paying off for him, but it's like all in on Bitcoin, right? And
that boy's all in on Bitcoin.
and if it works, damn it, it works, right? And it works well, but if it doesn't, it will take you out the game, right? So I think it's one of those things. There's so much to learn, so much that we don't know, but definitely have some exposure. And the exposure you do have should be in what seems to be the most vetted and tested so far.
Yeah. And here's the thing. One thing that we always say is that you don't. The more you try to hit home runs, the more you'll strike out. Right? So when it comes to investing, if you're always swinging for the fences, you're going to strike out more than necessary. And one thing that we always remind ourselves is that if you're already up 30, sometimes it's okay to just get on base. Right. You know what I'm saying? So if you're already doing good financially, you don't need to hit a home run with all your investments, right? If you're already up 30 points in a baseball game, just get on base, bro. You're fine. You're fine. When you try to swing for the fences all the time, you're going to strike out. You're going to lose. You're going to be mad.
Right. Like most people will say like earning 10% of your investments a year is not good. Well, it's because they don't have a lot of money invested, right? The more money you have invested, that 10% looks real.
You got $1 million. You got $1 million invested. You're making $100,000. Rain, sleet, or snow. You can sleep in late because your money woke up early. Period.
Right. Here's a quote for your listeners, right? Wealth is made through concentration. It's preserved through diversification. Right. What I mean by that is, remember how I said several minutes ago, invest in the S&P 500, invest in you, right? Your most concentrated asset is going to be you, right? You're going to go out, build a business, make a lot of money, right? That's the concentrated asset. Once you make the money, you then diversify, right? And that's how you preserve the wealth. Because at some point, the wealth game is about preserving it, right? You gotta accumulate it, right? You gotta distribute it, at least some of it, and you got to preserve it, right? So like at some point it becomes about playing defense, right? You want to play offense. You want to get like, don't get it twisted. Like, get the money. Most people listen to this. Listen, get the money.
Listen. Right? Get the money.
Get the money, right? That is because if you don't have it, right, you're not going to be able to do anything with it. But at some point it becomes about playing defense, preserving it. How can I get some of these base hits? How can I get the 10% here, whatever? Because building a business in and of itself is risky, right? Yeah. Like, it's hard to build a business. It's not easy. That's where you're taking your risk with your investments, right? It's like, cool, let me have something I don't got to worry about all the time. You know what I mean?
Yeah.
So
that kind of reminds me of because on the YouTube channel CNBC, they kind of have like, you know, they showcase some people who are able to retire like 40. You know, but then when you kind of look at the backstory, it's like, hey, you know, I was working in tech, they was getting a decent salary, and they don't even care about, you know, any other ventures. They're just like, yo, I just want to retire early, right? You know, freedom. That's their main thing. So, what would be your advice for somebody in their 20s, to retire, like to possibly retire at 40 or a little bit before 40?
It's a really simple equation, right? So let's go through 3 scenarios, right? The average person, if you Google it, it's been this way for, unfortunately, a very long time. Average person in the United States makes around $50,000 a year. If you do everything right, I mean everything right? You live in modestly, right? You might be able to save 10%, save and invest 10% of your income. What's that? $5,000, right? The math is just gonna equate to the fact that's gonna take you around 30 to 40 years to have, you know, enough money to retire, right? What happens if I make $100,000 a year, but I say, you know what? Because I double my income, I'm going to double my investing rate. So I go from 10% to 20%. That same person is investing $20,000 a year versus $5,000. So they've quadrupled their saving and investing rate. So it goes back to the same thing. You become a person of value. You make more money. You become a good steward over that money. You invest that money, and that's going to speed up the process. What happens in that process is, I start making more, and now I'm thinking about all the things I couldn't get when I didn't have it, and now I'm spending it on necessary things, right? But if you can jump over that and be a good steward over your resources and allocate more of that money towards investing, that alone is going to get you there faster. The other things that get you there faster is investing your money once into the stock market, following the Burger King investment strategy, borrowing against that, and then buying cash flow producing assets like real estate, reinvesting that cash flow back into your portfolio so you can do that to get to your freedom target 3 times faster. But most people get stuck in I'm making the money now. Now I got to impress people on Instagram
who I don't like, who don't care about me.
Facts.
Don't know.
And again, I don't mean to beat a dead horse, but it really is that simple. The simple is you make more money, and you let your lifestyle expenses level off. Right? Like, because when you were making 50 grand, you found a way to live. You found a way to make it shake. So why is it that now I'm making 100? I'm now feeling, oh man, like you had to get the bigger house every time. You had to get the bigger car every time, right? That's a money management problem, right? So the quickest way to do that is not making a cap on your income, but starting to cap your expenses. And me and him talk about it all the time, even at this level. Like we'll see people like, see this story before.
Right?
You know what I'm saying?
Had to go get that. You ain't really need that.
G-Wagon for the tax write-off.
Well, I mean, but like, here's what I say about people spending money to save on taxes, right? If you spend $1,000, you're only saving $300. Your savings are only equivalent to your tax rate. So if you're in a 30% tax bracket and you spend $1,000, you spent $1,000. You saved $300 in taxes, but you still out $700. You know what I'm saying? So we can't spend our way to saving on taxes and expect to build wealth at the same time. That's a childish game.
Nice.
So I was gonna ask, like, you know, being that tax is about to be tax season. Probably we're
in it.
Yeah.
People gonna be getting their tax returns, you know, real soon. So you guys are the perfect people, you know, to ask again. What are some ways that people can make, you know, money off their tax returns?
Well, so first of all, you shouldn't have a tax refund.
That's the first part.
Period. So can we talk about that? Like, because most people don't understand what a tax refund is. I didn't understand what a tax refund was until my graduate school tax class. And the professor came in and said, what is the best tax refund you can get, right? And everybody writing down, I'm like, 10 bands, 20 bands. I remember my parents being geeked. Tax time. And we all wrote our answers down. We held them up, and he looked at everybody, and he said, 0. It's like, what you mean? Like, I'll be pissed if I got a $0 tax refund. And he said, all a tax refund is a interest-free loan that you gave to the government for 12 months of money you should have already had. So if you get a $10,000 tax refund, that's the government saying to you, you overpaid us by $10,000. But we held on to the $10,000 January, February, March, April, May, June, July, August, September, October, November. We held on to this money and paid you no interest for 12 months. But we will give it back to you because you gave us too much money.
Facts.
Right?
Wow. Can we make it real quick before we go to his next point? Can you Google for me real quick, what did Palantir stock do in the last 12 months?
Palantir?
Yeah. Let's look at what it did the last 12 months. I know. I just want y'all to see it. I'm going to make it real for y'all. I'm going somewhere with this.
You said the past 12 months?
If you just type it in and then go to Google and go to the chart, it'll show you can go to 12 months.
Okay.
Right. So just type in PLTR stock.
It says coming up into Thursday trading, shares were up about 380%.
Well, 353%.
353%. Okay, cool. So let's say that tax refund. What's the tax refund that we
10,000.
10,000. Okay, cool. So if you had $10,000 to invest last year, right? And let's say you didn't, and all stocks aren't going to perform at that rate, right? But if you just do Miami math, right, you would have tripled your money, right? Yeah. But you waited 12 months for Uncle Sam to give you your money back that was already yours, and that's what we call opportunity cost, right? So when you give the government, basically what you're saying is, I think you're a better steward of this money than I am. So hold on to it all year long, and then give it back to me in February, March, whenever I get my tax refund, right? That's essentially what you're saying when you have a tax when you get a tax refund. You could do way better than this than I could, so just hold on to it. 'Cause I probably would fuck it up, excuse my language, and then just give it to me at the top of the year. But what it really costs you
is about 20, because 10,000, they would have made $35,000. So it really cost them $25,000 in interest by not having that money early to invest. So people are like, I want a huge refund. No, you don't. Right. You want to get that money throughout the year so you can invest that money throughout the year, right? Instead of waiting to February and then blowing it on something you shouldn't.
Right. But to answer their question, so part of your question was, what should, if they are getting one, what should they do with it? So what would you say? To that, what would you say?
I mean, if you got the $10,000 tax refund, I would use it to buy something that's going to I would use it to buy something that would decrease my tax bill for this year. Right? So if you get a $10,000 tax refund, what can I do with the money that will allow me to lower my taxable income for this year? So next year, I won't get a $20,000 refund, but I'll be able to get that money throughout the year, right? So I would reinvest into my business, invest into real estate, a cash flow or a investment vehicle that will help me make more money and pay less taxes at the same time.
Which is going to be a business or real estate.
Period.
Yeah.
Okay. That's crazy because, like, just growing up, like I said again, misinformation. Like a lot of people
want that tax refund.
They want that tax refund.
Yeah.
You know,
it's even to this day, it's still jokes online. Like that's all you keep seeing is like, yo, what am I doing? My taxes hit. Yeah.
And then I'm seeing even some people claiming other people's kids. It's like just to get a bigger refund. So it's like, we grow up and we just hear that a lot. Like everybody just wants a big refund check.
Yeah. You don't know what you don't know, right?
Yeah. And I didn't know. Like once I had that tax class, it changed my life for the rest of my life. I now no longer see the value of a tax refund because I know that's my money to begin with that they held at 0% interest for 12. That's worse than a bank. At least a bank can give you 0.00001. They ain't give you nothing. You know what I'm saying? So,
but they trick you into thinking that they did, right? So people now are like excited about the tax refund. You always gotta, whenever something seems like a benefit to you, you always gotta ask yourself, like, who really wins in this scenario, right? Who's the real beneficiary of this? And once you start asking those questions and start peeling back the layers, you start finding the answers and you start moving differently.
Yeah. So do you recommend like people doing like their own taxes? A lot of people fear the IRS.
Here's the answer: we don't do our own taxes.
Period.
He's a CPA.
I don't do my own taxes.
So I think that answers your question. No, do not do your own taxes.
Yeah, it'll cost you more money in mistakes than money you'll save trying to do it yourself. And here's a life lesson that takes people way too long to learn: experts are expensive, but amateurs will cost you a fortune. Right. You letting Auntie Pookie and them do your taxes because they only charge you $100, but they costing you thousands of dollars in missed refund opportunities or missed tax saving opportunities because they don't know what they're doing. You could have paid an expert 10 times that and got so much more money back, but because you wanted to hire an amateur, you got to pay what I call the ignorance tax for not hiring the right person in the first place.
Right. Yeah. And to his point, right, when he says get more money back, we're not talking about a refund. We're talking about there's two tax seasons, right? there's tax planning season and there's tax paying season. Most people are meeting with their tax man, tax woman, right? Top of the year. They just got their, forms, right? We're meeting with our clients, throughout the year. And at the latest by October, they say, hey, look, how can we make sure that we don't overpay, right, in taxes? How do we keep more of this money so that we can invest it, right? And I think that's the part that people are missing. It's like, yeah, you do want to get the money back. You don't want to pay Uncle Sam, but you want to have control over it so that you can make the investments proactively and not have to pay that opportunity cost.
Yeah, if you take care of business during tax planning season, you don't got to worry about nothing during tax paying season. Right? If you don't know how much you're going to owe in taxes by January, February, something's wrong.
Right.
Because you should have met your CPA the last quarter of last year so that we could do a tax projection to see how much money we could be able to save you.
So what if a business owner is not making that much money, because you said you got paid top dollar to be able to, get the return that you're looking for?
You don't have a tax problem unless you solve the money problem.
Bingo. Yeah, it's like the person saying like, oh, I need to get this website, I need to get the trademark, I need to get this. Okay, bet. Yeah, so how much you doing? Oh, I ain't really started yet. Like, bro, like go make some money.
Yeah.
Right? Like that is the answer to a lot of things. It's like solve the money problem first, and then that's going to create the problems. Like you're going to know what problems you need to address like once you start making some money.
Man.
Right?
So Carter, what are some tax loopholes for like entrepreneurs in 2025? Because I'm not even gonna lie,
my thought like, how much time you got, bro?
Because there's
so many.
Give them top three.
I'm not even gonna lie. Like I didn't heard we had some entrepreneurs here, and one of them was like, oh, it's the end of the year. I think I made too much money. I think it was like, I think I'm gonna go buy a Maybach, like just to. And I'm like, what are you doing? Like, I'm sitting here like, why are you gonna go and blow that much money?
Yeah.
Oh, I made too much money. But apparently they out here having fun with all these tax loopholes out here. So what are some?
Yeah, so I'll break it down like this. There are 3 levels of saving on taxes. Okay, there's tax deduction strategies. So it's how do I spend money to save on taxes, which is what most amateurs do, and that's starting out. Then there's income shifting strategies. How do I move income off of my tax return and put it on a different tax return at a lower tax rate? Then there's the depreciation strategies, which how do I invest in assets, increase my net worth while lowering my taxes at the same time? That's where the big dogs play. And most of our people, unfortunately, are still playing the little man's game where they say, I just want to spend money so I don't pay taxes. That's not a good strategy. You want to find, how do I income shift? How do I move money off of my tax return, put it somewhere else, like paying your children, getting money off of your tax return, getting money on their tax return? How do I set up a private family foundation where I can donate to my own charity and write off 30% of the money I donate, then use that money to fund my family's future education? Right? Strategies like that. Or how do I buy assets, like setting up a solo 401k for your business where you can put away up to $70,000 a year and invest that in your net worth, and you also get a $70,000 tax deduction at the same time. So you'll get a tax deduction today for investing in yourself tomorrow. Right? So like there's levels to tax strategies, and unfortunately our people are still stuck at the surface level of how do I spend money to not pay taxes, but that is not the only way.
I'm gonna give you some homework. So you should take those 3 buckets that you just did and then put the top ones that they should consider in each.
Oh, Deja, me and Deja already did.
Already did that?
Yeah.
There you go.
Yeah. We spent Friday doing that.
Yeah, okay.
Yeah.
That's so interesting, man. Like,
it's levels.
my mind is bust right now.
Like here's the thing, bro. And I know I had tax people on here before. I know y'all. Again, shout
I love Miss Dick. First of all, Shaquana is my sister.
That's our,
okay?
that
was a joke, okay?
Yeah. Right. So that's why I wanted to preface it, because that's fam, right?
Yeah.
Anybody else that you had on, right? But like, just because, right, you're playing the same game doesn't mean you're playing in the same league, right? Like we got to understand that there's people that play, JUCO. There's people that play in the NBA, right? It's the same game on a fundamental level, but there's different leagues.
Talk your shit, man.
And so I think what happens on social media is we get these sound bites, and then it's like someone says this, they say that. It's like, ooh, that sounds good. But you ask them another question, and they're like, well, yeah, like they start, shifting around. Like, we do this for real in real life. You know what I mean? Like, and not just for ourselves, for hundreds, soon to be several hundred, soon to be thousands of clients, and tens of thousands of people that attend our, free trainings and stuff like that, right? Like, this is what we do. So it's up to us to know the ins and outs of all these things, because we've seen every scenario. We've had clients get audited. Like, we've seen it all. And so, like, when you've seen it all, you can also look past the bullshit that you see on social media. That's like, oh, okay, they're telling you to get the trust in the Cayman Islands, avoid taxes, submerge it under the water. Like, come on, bro, really? Like, it sounds good for the soundbite, but like, bro, like, who's that applicable to? Almost no one, right? So,
oh man.
So, what would be your advice for people who, you know, they are in debt? Like, a lot of people, you know, they say like, hey, I got student loans, I got mortgages, I don't got no money to invest. Which one would you advise them to prioritize in terms of like for their financial future?
They're a student. They have student loans. They don't have any money to invest. I would prioritize. I would tell them to do what they should have did before they even went to college, but they didn't know any better. They obviously value college, right? Because they went to get the education, but they didn't get the right information, right? So when you're young, it's the best time to skill acquire before you start building up this lifestyle, right? What I encourage them to do is like, hey, look, who do you want to be in this world? And before you start trying to do everything to impress everybody else, when you don't have a wife, when you don't have kids, like when you're super young, like it's cool to be a starving artist in your 20s. It's scary in your 30s, right? Like I would encourage you to like learn, like who can I get around? Like for example, let's say that I think this might be the first year, I don't know if you know this or not, but like we're gonna open up some internship opportunities, right? Like who can I get around, right? That's done what I want to do, or like I believe that I want to do. How can I get as close to the fire as possible? Maybe they won't pay me a lot. Maybe they won't pay me anything. But how valuable will it be for me to gain that skill at this age? Right. So if you're just graduating, that's what I would recommend because you don't have the money. Right. So what are you going to do? Go get a corporate America job that you hate and then, then wake up 5 years later and realize that it's too late. But because you're miserable at the job, you start buying stuff to make you feel better. And now you acquire this lifestyle and you got to humble your we've seen it all. Right. So if you're young, the best thing you can do is skill acquire, get close to people who have done what you want to do, add value to them. Don't ask them, how can I, stupidest question ever. Don't ask a multimillionaire, how can I add value to your life? I don't know you. I don't know how you can add value to my life.
You tell me.
Right. I'm online. I'm outside.
Yeah.
Right. As the cool kids say, what are you seeing as an opportunity? Hey, I see that you do content, right? But like, I know you don't have captions on your short form, or you only do long form, or you don't have like, and it's not, I mean, that's not the case for us, obviously, right?
Yeah.
But like, whoever it is, how can you add value, get close to them, have no expectations, but to be in proximity with someone who is making the profit you desire to make? That's the only thing you could, and again, I know it seems like we're beating a dead horse, but this is information I wish I knew 15 years ago. I wish someone told me, hey, look, instead of getting that cushy corporate consulting job that you're going to quit pretty soon anyway, right, and unravel this lifestyle you started to build, go find somebody who's already, in this example, driving the Lambo, living the lifestyle that you want, because that your boss ain't driving it, right? Your boss ain't living where you want to live. Find them, get close, and learn what they learned so you can become who they became.
Period. And just because somebody's driving a Lambo don't mean they have money. That's
a fact. That's why I preface.
That's not. Yeah, I was like, let's not.
Lord knows.
Yeah. Okay.
Right. Lord knows. We actually had a debate, well, not a debate, but an interesting thought on the way over here because we got dropped off in a black car, and like we're in the market for supercars right now. So it's some new supercars. He already owns a Lambo.
So what you guys thinking?
I'm thinking of F8. Right, and he's thinking
Lamborghini. I might go Aventador, but
yeah. But the point was, I was like, man, am I at this stage in life? Like, I feel like I just want to be. I don't know if I want a supercar. Yeah. Right, I might just want to be driven around everywhere.
Yeah, because here's the levels. You go from not being able to afford a car, to finding an affordable car, to getting a nice car, to getting a supercar, to not having a car again. Because at a certain point, you understand the time you spend in the car can make you so much money if you're working that you'll make more money on the ride to the airport than the car payment itself. You know what I'm saying? So that's what we consider. We might just get a driver and a Sprinter, and that way we can just work whenever we go somewhere.
It's levels to it, man.
Yeah.
It's levels to it. It's levels. I'm mind blown right now.
You manifested it. As he said at the beginning of the episode.
Yeah, he said, you caught it. You caught it.
Right now.
Yeah.
That's crazy. I definitely do want to jump into, just how could, matter of fact, let's jump into what you guys got going on, especially with the Melanin money, because I do see you guys, having award shows, honoring entrepreneurs, really, really good stuff to see. What made you guys come up with that idea?
And you guys are like the first.
Yeah,
you like the first to do it in the community, right?
Yeah, it's good when somebody else says it.
Shut up.
So long story short, right? Actually, in college, one good thing that came from college, I was in one of my marketing classes, and professor said something that stuck out to me. He said, people will do more for recognition than they will for money, right? And then as we started to build our business, I said, well, we want our clients to build their net worth. We want them to build this $1 million. But like, people don't typically celebrate you for fully funding your Roth IRA, right? They will celebrate you for the Lambo, even if you're behind on payments or you're struggling or whatever, right? But they won't celebrate you for building wealth, because wealth is an unexercised option, right? It's unseen, right? Wealth means I have it and you can't see it. And I haven't spent the money. Riches is like, oh, it's tangible. I can see the chain. I can see the watch, right? And so what we figured out is, if we could recognize people, it started with our clients before the other entrepreneurs, we might be able to help them get to their goal faster. So then we say, hey guys, we have net worth awards, right? When you hit your first 100K, you get this medallion. When you hit your first $500,000, you get this trophy. When you hit your first 1 million, you get this plaque, 5 million, 10 million, et cetera, right? And people got excited. It's like, all right, how do I submit it? When's the deadline? I said, aha, we got something, right? So then that expanded into an actual award show where we can tangibly track the net worth improvements that we're making in the community, right? Because people say all the time, like, generational wealth has been the buzzword for the past decade. When to close the wealth gap has been the buzzword for the past decade. We said, well, how can we validate and prove it? Because we still are, still have a financial services firm. So people give us their data, right? It's synced up to a profile. We can literally see like what their actual net worth is. When it reaches a certain threshold, they're eligible to receive a reward. And then we just took it a step further and had an actual award show. The next part of that was, well, we love what Melanin Money is doing, but we're not the only ones out here doing. Y'all are doing great stuff, right? There's a lot of Wall Street Trapper, EYLs, a lot of people doing amazing things in the financial literacy space. We said, we're not selfish, right? It's not about what Melanin Money can do. What can the culture do as a whole, right? So instead of having ego and it being just about Melanin Money, we said, how can Melanin Money be a platform to recognize and honor the other people who are doing great things in their own right, right? And then that's when we added the component of celebrating other entrepreneurs who are also doing the work with helping people of color build wealth.
It's almost like the Grammys and
the Grammys of Black Wealth.
The
Grammys of Black Wealth.
See, so it's so refreshing because you say these things in silence. I wonder if they see that. Right? So it's the same way the Grammys 78th annual, like, this will outlive us, right? We're on stage now, right? But like, this will outlive us. There'll be a time when George and Carter are somewhere in a yacht in the middle. Well, we're still here. We'll attend, right? But when we're gone, right? It'll still live on. And like, man, we sowed a seed to really tangibly track the collective net worth improvements of our culture and nominate and celebrate other people who are doing amazing things. So yes, that is the goal. The Grammys of Black Wealth.
You got the Grammys and then you got the podcast as BET.
Come on now. Absolutely.
Let's go.
Absolutely, bro. The media, that's why we were at the stock exchange. The big listen, we can't give it all out.
Listen.
We can't give it all out. But I live in decades, bro. So like whenever we're doing what we're doing, I say I'll see you in another 10, right? It's like, I've been entrepreneur for 13 years. You've been entrepreneur how long? 8, right? So it's like, we're not playing short-term games, right? We're trying to be here for a long time, right? It's like not just a good time, but a good time and a long time. And that's the part that people don't see. They see what we're doing now. They don't realize like how long we've been doing this. Right. You know what I'm saying? Like, it takes time. And I know with the internet now, things can move fast. I'm not saying it has to take a super long time, but just like a tree, right? You got to plant the roots first for it to be stable enough to grow into the thing that you want it to grow. The problem is people plant something and immediately they try to bear the fruit, right? The tree's wobbly, it's leaning over. It's because you got to plant those roots. You got to dig deep enough to have something that can weather the storm, like literally and figuratively, right? Like the pandemic, right? Everybody was getting money. And instead of like reinvesting that money, what they do? They went and bought the Lambos. They went and bought the chains. And now everybody's quiet. Now people are scrambling. Right? They're scrambling. We doing taking market share. Got them. Right? You got to be good to the money when the money's good to you.
Period.
Right?
What's the best financial move that you guys made that changed your life?
That's a great question. I don't know if I've ever been asked that question.
What's one of the greatest financial moves we've ever done? I think investing in this company, bro.
I was gonna say becoming partners.
Becoming partners is probably one of the best one of the best things that we did, because so many black men have so much ego, man, and it's so tough to like put your ego aside and build something bigger than you. So I think one of the best things that we did, like, we put our money into this vision of this company. And it is served us well financially, but it's also going to serve us further than we ever could have imagined. And I think that we literally took our own advice. We took some money out of the S&P 500 and invested in the SME 500. But this, instead of the SME, it was the Melanin Money 500.
Might be taking someone one day. You never know.
Yeah.
You know?
So that's probably one of the best investments we could have done.
Yeah, I mean, honestly, I was gonna say the same thing, right? Like, partnering with somebody who has complementary strengths, because a lot of times people think that like, oh, you know, you do the same thing, I do the same thing, we gonna just run it up together, right? Like, while we do have a lot of similarities, right, in a lot of ways from a personality standpoint, and like we enjoy a lot of the same things, right, when it comes to business, we have separate but equal skill sets, right? So that means that we can divide and conquer. It means that we have different perspectives. You know, I'm a married man with a son, so naturally, you know, even though he hasn't seen me miss a beat, and you know, when it comes to running for the business, I have the space and grace to focus on things that maybe, you know, doesn't make sense for me at this season in my life, right? And so I just think having that as a part is really a secret weapon, right? Same thing for him. It's like, you know, there's certain things that he might want to focus on and that he might not want to do that just so happen to be my skill set. But it wasn't an accident, right? For 2 years before we became partners, we met every other Monday, right? For 2 years.
At like a restaurant?
Nah, we live in different cities. Like, we met at a conference, right?
Yeah.
And then we were like, it was a conference for financial advisors, wasn't a lot of black people there. So we stuck out like sore thumbs. And then we exchanged contact information and said, hey, you're a solo entrepreneur, I'm a solo entrepreneur at the time, for the most part. Let's exchange ideas, right? Every other Monday. What's working in your business is working in mine. It kept working. Right, we kept seeing, oh, you still here, you still winning, right? And then after that, it's like, well, let's start the podcast, right? It's like no money involved. Let's continue to build our brand. We did that for 2 years, right? And then after that, it's like, okay, like we playing now, like let's go all.
If you ain't give up in 4 years, you're gonna be here for a little while. You know what I'm saying?
And again, not saying it takes that exact length of time, but I think it's something to be said about the solidification of our partnership and the time that we took to make it, you know, to make it happen, right? Sometimes people just like, they jump in too fast. It's a microcosm of dating, right? It's like, would you see a pretty girl, it's like, are you gonna automatically like get married tomorrow? It's like, no. Pause. I mean, you know what I'm saying? But like
we are in New York.
Gotta be careful.
Yeah.
But like, no, you're gonna take the time to make sure that it makes sense, right? And then over time you can extend the partnership. You know, I was about to say something else. I knew y'all was gonna pause. Extend the partnership, and then before you know it, you know, you're building a multi 7-figure, 8-figure empire.
That's amazing to see.
That's amazing what y'all doing, because it kind of remind me of like, you know, our story, like, because even to partner up with somebody, it takes a lot.
You gotta
put your ego aside.
It's a lot, bro. It's a lot.
Because I can't even lie, like when me and Cody first started, we didn't see eye to eye on certain things. You know. But then down the line, we kind of seen our strengths and weaknesses and you know, made it work. So definitely, like, what y'all doing is great. And I'm glad, like, appreciate, you know, it's inspiring us, you know, to keep going. So definitely, like,
that's the key thing, is to keep going.
Things,
right. And if we weren't inspiring y'all, right, like we would be doing y'all a disservice, right? Like, I'm a few years older than Carter. One of the things I always told him, I was like, bro, like, if you're not further along at this age than I was at that point, then I failed. Right. So if we can't provide some type of inspiration or perspective of like, hey, like, because y'all in y'all 20s, right? Early 20s, 25, right? So it's like, like, just EYL's older than us, right? So we did their podcast, like, yo, when y'all did that, we saw that, right? So that's how it's supposed to be, right? It's like, but so many people have ego, and it's like, oh, I don't want them, I'm gonna do it my way. I don't want them to know I saw what they was doing. Like, no, bro, like, I pay homage where there's people that inspire us. It's an honor to hear that on some level, you know, we provide inspiration to y'all, and I hope, right, I mean, by the time y'all are 33, 34, 35, y'all should be killing where we were at that age, right? Because y'all had an example. A lot of things that we've done and other people that came before us, they didn't have an example, right? So the more examples you have, the world becomes better for it, right? I think what they say, all tides, what was it, tides raise, you know the quote? All tides raise the boat, something like that. I butchered the quote.
Yeah,
you know what I'm saying?
Yeah. I know what you're saying. We'll pass you all the same advice that EYL passed us when we went to do their podcast. They said, stay together. No matter how hard it is, it'll be ups and downs. Y'all stronger together. They are apart. Stay together. So we pass that to y'all.
Appreciate that, man.
Facts.
Last question before we wrap, because we did give a lot of game. We went over a lot of different, strategies, advice, things like that. So, what's some epiphany moments that you guys seen, either for yourself or your clients, to be able to have the mindset to go out and do these things, you know, because you have all the information, but you have to have the mindset to be able to, you know, do this.
Yeah, I think the epiphany comes from action. What I mean by that is we had a client who, you know, was working with us, you know, trusted our advice to say, maybe we need you to do this, we need you to invest this money over here, right? And she's kind of like, all right, cool. Basically, she was doing it because we told her to do it. Maybe she didn't have the mindset at that point, right? Then a couple months go by, she logs in. She's like, wait, hold on now. Like, why is my account has why does it say it's green and it's up this percentage and it says I made $33,000? I was like, oh, your money made that money. She's like, well, I didn't deposit anything else. I said, no, your money made you that money. Those are the returns. And so when she saw that, she realized like, oh, wait, you mean to tell me that when I invest, right, even though I'm out here working hard as an entrepreneur, I'm waking up, I'm hustling, my money can work harder for me than I can ever work for it, right? And so I said it to say the epiphany comes from taking the first step. Right, it's kind of hard to have the aha moment if you're unwilling to take that step. And that step might not be as big for everybody, but take a step, right? And then once you see that, okay, the ground is solid here, you're gonna take the next step. And then before you know it, you look up, and that step has turned into a mile, which eventually turns into a marathon, right?
Yeah, I'm similar to that. You don't have to be great to get started, but you do have to get started to be great. And so, take it started.
Just gotta get started.
Very simple. Right. Yeah. There we go, man. So I just want to say I thank you guys for coming through. You know, very much appreciated. You guys are definitely killing in y'all space.
Appreciate that, bro.
Not only just directly to your clients, but people that just follow you guys overall.
Appreciate it, brother.
Yes, sir.
You know, I'm glad to have you guys here for sure.
Appreciate it, bro.
Man.
Thanks you for having us.
Yeah.
Y'all keep doing y'all thing, man. We wouldn't have made the trip and came out and did the show if we didn't believe that what y'all are doing is amazing. So, man, keep crushing it. Keep asking amazing questions. Keep getting great guests. And I'm excited to see y'all's journey, too.
Appreciate it. I got to ask one question. So we got a community we got going on.
Okay.
We're starting, right? Take the first step. Yeah. So now we want to be able to invite our guest that comes in, you know, to be able to give some kind of information on their expertise. Because like you guys said, you're a CPA, you're a financial advisor, but you're not handling your own things. Yeah. You have the experts that come in and do these kind of things for you. Would that be something you guys be interested in down to do?
Yeah, absolutely. Yeah, we'll come in, teach a class, unpack some strategies for them. Absolutely.
Easy money.
All right, cool. Yeah, appreciate it.
Nah, this is a great one. Like a lot of education, a lot of tips, and like, you know, I know a lot of people's minds is gonna be blown. You know what I mean? So it's always great to have, you know, especially people that look like us.
Yeah.
That are experts in the field, so you know people gonna resonate with this one.
We appreciate it, man. Looking forward to it.
I hope y'all enjoying y'all time out here in New York.
Yeah, we got a fight. Yeah, I was like,
get it out.
Yeah, getting out this joint.
When it warm up, we'll stay for a little bit longer.
Yeah.
In the summertime, we'll be back.
Yeah.
Nice. All right, and where can they find you guys?
Cofield _advisor on Instagram, and then
George Acheampong Jr. on Instagram. Probably gonna link in the show notes. I know my last name is long. But and
definitely check out the Melanin Money Show on YouTube.
Yeah, definitely check out the Melanin Money Show on YouTube and all of the platforms.
Okay. All right, cool. Well, this is another episode of Motion and Success. Go ahead, make sure you like, comment, share, subscribe. Drop your favorite part in the show down in the comments below, and we gonna see you guys in the next one. Peace.